who is now accepting Dogecoin? Is Target going to replace the mall? What is a SPAC and why is everyone doing it? And 17 more. What's up, everyone? Welcome to the Budgets Brews morning coffee break where we discuss, chat, and ramble about last week's top 20 financial headlines.
Today is March 7, 2021. Let's get that coffee out and start brewing those hot headlines.
And remember, you can watch these episodes on YouTube. If you're currently listening via podcast, we're going to discuss our top 10, then list and link the remaining 10 for your enjoyment. Tony, what is our first headline?
The first headline we have today is, it's not really a headline. I just kind of wanted to discuss the market and the major stock indexes. So we saw some ups and downs last week through the S&P 500, Dow Jones Industrial Average, and the Nasdaq. However, despite all the nail biting, all three markets ended high at the end of the week. So the S&P 500 finished about 0.5% up. So it came back from being negative.
Good.
The Dow Jones Industrial Average popped off and finished up 1.6%.
That was down for a while.
Yeah, that was down for a while. It was like down almost 10%, I think, at some point. And then the tech-driven Nasdaq finished the week up 3.6%. So overall, not as bad as it sounded compared to all the volatility.
And a lot of the hits were from actually the big tech companies too.
Yes.
That's what sort of dragged a lot of the markets down. So, but good update on that. We are staying clear. We'll see what this week brings. But moving into the real headline number one, but our headline number two, Zoom, talk about tech, was down 16% last week after exploding 443% in 2020. There's and more to this. So when that first announcement happened, I thought it was pretty cool because, well, not cool, but they were trying to figure out why is it down, right? Why is Zoom going down when we're still remote and we're working with it? Stanford researchers looked at the psychological consequences of spending too much time on video calls, and it highlighted just how stressful it actually is. They state when someone's face is that close to us in real life, it's interpreted as an intense situation that it's either going to lead to mating or to conflict. So the real life component versus how we are interacting now. So will Zoom, Skype, Google Meets, all that stuff, will that sort of live and continue with us, or will it decline? So I'm thinking, is it going to grow or not? And then as I'm formulating these sentences, all of a sudden the next headline drops. It was like the next day, and it is, wait a second, after hours, Zoom stock shoots up 10% following a better than expected earnings. So I thought that was funny. That is the and then to this. So it was down 16, but then it shoots up that following day. So it's interesting, but the world that we're in now, what do you think, Tony? Do you see like some of these other applications still being around in 2 years? Do you see their stock value increasing? Are they going to adapt to people going back to work? Where do they stand?
There's a lot of good questions there to kind of jump into it. When COVID hit, a lot of companies had to go to remote work, right? Almost everyone, right? So these companies doing these Zoom meetings and stuff like that, there was an interesting study on the psychological consequences of spending too much time in video calls and stuff like that. But, when you think about it, it's an intimate thing. You're in a video call with someone, you're face to face, they can see your expressions, you can see their expressions, a little bit more intense than just talking on the phone. So a lot of companies are starting to integrate this into their meetings so they can continue to operate as close to normal as they can. Do I see this going away? Not entirely, but I'm sure as things start to go back to normal, we'll see less and less remote work. One key indicator, though, that I did see is that some companies, especially in like customer service fields, as they're sending their agents to work from home, productivity is actually boosting up. Their stats are getting better. Their the client surveys are coming back higher. So remote work is benefited some markets and others not so much. So I think it's a very complex thing we're talking about here. But obviously anyone who invested in Zoom is happy because of the growth that they saw through 2020. And now that, we saw that slight decline and then following better than expected earning reports shot back up 10%. I still think Zoom's on a great path as well as Skype, Google, the other ones as well.
Agree. And to wrap this point off, do I ever see a 400 50% hike in a Google Meet, in a Skype, in a Zoom? No, I don't think so. I mean, that is,
that was a
that's
one-time
not
thing.
normal, right? Yes, and
Yeah.
it's because of the situation we were in, it hiked up there. So if I'm going to say I'm going to go bet on a single stock, I'm not going to say Zoom. If anything, it might steadily decline as we go on. I don't know. But
Sure.
what I will say is it will be around, and we will have more strictly remote positions is going to form this. I think the business travel is going to stop, or not stop, but it's going to diminish a little bit too. They say 25% of it's not coming back. And so there's going to be more and more meetings using these platforms. So I think we'll always be there. I don't see it obviously making huge gains and trying to, going to put some money in and just retire off of Zoom.
Well said.
Yeah.
Well, let's jump into number 3 here. And I have Tesla stock underperforms the market Friday compared to its competitors. So Tesla last week dropped 13%. It's been on a steady decline. Over the past month, it's down 30%. So Tesla, I think it dropped below $600 per price per one share of the stock, which is a 30% decrease from where it just was, over a 30% decrease from where it just was a month ago. So, Rich, how are you feeling about Tesla? We're seeing other EV companies and other car companies go into the EV sector. Do you think this is going to bring competition their way? How do you feel about Tesla moving forward?
Well, I definitely think it's going to cause competition. I mean, right now, everyone's trying to just get their vehicles out there, make everything full electric, autonomous, all this stuff. And I think that when Tesla was starting off, it was the hype, and people were just, throwing money in there. And then it was almost like Elon Musk was this god. Anything he said or did, everyone was like hailing to him.
Right.
And now, even when you saw a couple of weeks ago when he threw all that money in Bitcoin, we actually talked about that as a headline, and Tesla didn't really move that much. Bitcoin did. And so now all of a sudden it's like, okay, Tesla, you are cool. That's great. Keep doing what you're doing. They ran into a couple other things. They had some recalls as well. They're going to be a competitor nonetheless. Sure. I just don't, once again, sort of like we talked about Zoom, sort of skyrocketing up there. I don't see that from Tesla anymore, skyrocketing it up, X amount of percentage, and people are just going to be rich off it. I think now you have other competitors coming in, which I like because I'm an index fund investor. We all know that. So the whole market with all this competition and people, maybe small companies starting to climb a little bit here and there because they're collaborating, they're working with others instead of just Tesla. And now all of a sudden it's up or down, moving market shifts. No, let's space that out. Let everybody come in there, create that competition, and let's grow together. So I don't mind this. And I think that Tesla stock was overvalued anyway with the hype in Elon Musk, period.
Elon Musk
so I'm hoping this is starting to balance back out and actually go to that normal level. Instead, they had to do, stock splits and everything like that, like share splits. So I think now we're actually seeing a company instead of a overhyped company.
And just to add a little bit, Elon Musk said his Tesla stock was overvalued, and at that point when he sent out that tweet or whatever happened, it dipped again, so it just shows the influence he has on the value of his company. But also we've seen Jaguar, we've seen GM, we've seen Volkswagen all moving towards EV, investing in EV. So that market is becoming bigger, and it's not just owned. It's Tesla's. Tesla will always be a Tesla. It's always going to be something sought after, considered that luxury, awesome brand and stuff like that. But there's a lot more players in the game now. So
because they were the first, it was like they were the first well-known one to do it. To sort of monopolize on that. Okay, moving to headline number 4. Robinhood is planning to file an IPO as soon as March, per Bloomberg, and I thought it was interesting. So my question is this a good idea for Robinhood? We talked about it providing a bare bone trading experience. So it's sort of lacking. You're just getting the minimum right there. It doesn't have mutual funds, index funds, tax sheltered accounts, etc. It's facing lawsuits. Reddit, the whole debacle, bailing hedge funds out and working with Citadel. So all this negative publicity is now a good time for Robinhood to IPO and launch in March now, this month, right? It seems weird to me. It seems like this is not something that I would want to get behind.
Why are they
doing
my money in. Right? Are they trying to get cash in? Are they trying to really get investors cash and stuff like that? Do they need that money? I feel like right now the trust that people have in Robinhood is like at an all-time low.
Right.
So if I don't know if they have any other reasonings for doing the IPO, but to me it doesn't make sense. So
they did a Super Bowl commercial. Maybe that's what it was. They threw it out there like, yeah, that's going to win for sure. Everyone's going to jump to our platform.
I'm sure people
if anything,
will buy
when I scroll through my feed, people are leaving Robinhood and they're going to these other platforms.
Yep. I've seen that a lot lately.
So I would be very cautious if anyone was going to think about investing in that IPO.
I'm sure we'll see more headlines we'll be covering in future morning coffee breaks. But let's jump to number 5 here. We have the Square CEO Jack Dorsey said his company is buying the music streaming service Tidal for about $300 million in cash and stocks. Dorsey says his goal for Square is to make the economy work for musicians, which is why they're purchasing Tidal. And because Square has helped out other retailers and stuff in running their companies, so they want to help musicians, so they're purchasing Tidal, and they hope this will help them reach their goal of helping musicians kind of like be able to process those payments to themselves, royalties, stuff like that. I think that's the direction they're trying to go. Despite this, like other tech stocks last week, Square's still down over 8% from last week. So, Rich, how do you feel about Square?
Well, I feel good about Square. Okay. And that is because, I guess I'll go ahead. We're going to combine maybe. So we have headline 5 that Tony just talked about. Number 6 is also a Square feature. So let's combine these two and then we could debrief them both.
Yeah.
Also, Square, predominantly mobile payment company, now has its own bank. So when you go into these mom and pop shops, it's usually the thing that's sticking on the iPad and you swipe your card and like that, the system right there to collect your, the payments, that's Square.
Yeah, your card information.
This bank that they're doing, it's FDIC insured. They're obviously known for the card reader point of sale payment system, predominantly, as I talked about, small businesses.
Sure.
And so here's the cool feature, I guess, not really feature, but here's the cool concept. If a small business needs a loan now and they use Square could actually see if they are a good fit. If they're going to be able to look at that payment system and the history. Okay. Is this company bringing in revenue? I know. Is this company losing revenue? Do they have a steady cash flow throughout the months? Like, I can literally look back at all the transactions you've ever made and then determine if you're safe enough for me to actually loan you more money or say no. So I really think that that's a neat feature for Square, especially if they're going to be issuing loans to these small businesses. It's just an easy way to sort of double check to make sure that this is somebody who could repay that loan back. So I'm not too worried about being down 8% last week because it was like a big tech hit. I think this is going to make up for it in the long run. They're going to be sustainable down the road for sure. And so I don't know much about the streaming service. Like, I thought that was weird for them to open the bank. They have the payment system, and now let's go ahead and buy the streaming system. But
yeah. For me, I really like Square as a company. We talked about them investing in Bitcoin. Now it seems like they're taking a lot of the overhead and the operation practices for small businesses, and they're saying, hey, come with us. If you're a small business, we will give you card readers so you can process payments. You can use our point of sale system so you can track all of your expenses and everything like that. And now, because we're tracking, we have all that data. If you need a loan, come to us. We can look at your thing and we can say, hey, you're a good person that we think you'll be able to pay back our loan. Here's some money. They're kind of going to open their own bank at this point, right?
Yep.
And now they're even looking into different markets. Like, okay, well, now we're going to buy Tidal for $300 million, and we can help musicians kind of process their payments. They're really starting to turn into like this big mogul of a company, a real powerhouse. And I like the things that they're doing. Very innovative.
I think they'll be sustainable, and I think they'll be fine. Good company to look out for.
Yeah.
Tony, what's our next headline?
So moving into number 7, Mark Cuban stated that the Dallas Mavericks are now accepting Dogecoin. It's the cryptocurrency that originates from the meme, that dog, the Doge. And it's a payment method that people can use now for ticket sales and merchandise at the Mavericks stadium. So why are they doing this? Because they can, right? Mark Cuban was quoted saying that sometimes a business just has to do things that are fun. So the transactions would processed by the crypto payments company BitPay, which has handled Bitcoin purchases for the Mavs since 2019. So just something kind of cool that they're doing. I thought that was a pretty neat headline. Wanted to throw it in there.
I do. I think it's catchy. It highlights the Mavs. Like, you're like, oh, what? Oh, the Mavericks, they probably don't have their name dropped too many times.
I got a question
marketing.
for you, Rich. I got a question for you. So, since the Mavericks are doing this, they're accepting Dogecoin just because they can. Do you think other companies will start to follow suit of this kind of trend, start accepting like cryptocurrencies as payments? Do you think that's the direction we're heading or no?
I would say maybe Bitcoin.
Okay.
Because I think in some states you could file your taxes with Bitcoin or something
Really?
like you could pay for something like that. And there's
Yeah.
Bitcoin conversion machines. Was it in like liquor stores in random city? So I think
Airports.
it's just the buzz around the Bitcoin right now, and more people buy in. So I think maybe I can see that. Dogecoin, I think this is a stretch. I think that he's doing that just for the publicity, just for the attention. Because if I had Dogecoin, even if I have Bitcoin, I'm using that as an investment. I'm not going out and buying stuff with it just to say I bought it, because it is so volatile. Like the next day, it could go up and down. It's like you could have just spent X amount of money and all of a sudden it shot up and you're like, oh, I want that back. I think people are using it more as an investment and not just to go ahead and buy stuff with it.
Digital gold, right?
Huh?
Digital gold is what people compare it to.
For this, I just think it's a marketing gimmick. Dogecoin is a
cool
whole thing
to do, though,
so
right?
Sure, go have some fun with the city of Dallas and everything like that, but I don't see that going viral. Like I said, Bitcoin maybe. I don't.
I agree with you 100%.
Not these smaller ones, unless it's being influenced by somebody who might want people to buy that specific cryptocurrency, and then you get into some borderline things by recommending it, just like the inflection of the price.
To your point, though, like who's gonna spend their? You're right. Bitcoin is definitely an investment. Like who's gonna spend their Bitcoin if it's skyrocketing up? You know what I mean? Like it's not at the point where it's stable, so people aren't. It's an investment. But let's go ahead and jump in to number 8. What do you got for us?
SPAC. So we're gonna talk SPAC. We mentioned this a lot, but we're gonna sort of break it down a little bit. SPACs did a record of 109 billion in transactions globally in February, according to the Financial Times. So I want to actually dive into the specifics, since we always sort of throw this term around. And so what is a SPAC? It's a shell company that goes public. It raises money, then it uses those funds that it raised to go acquire a private company. And in doing so, it takes them public. So it avoids the whole IPO route. So brings to another question. What is a shell company? A company or corporation that exists only on paper, and it has no office and no employees, but it may have a bank account or hold passive investments or be the registered owner of assets. So it's like you and I, we're a shell company, and we're thinking we're going to take a private company public. So we have these papers that identify us as this company. That's all we exist on. And then what we do is we go headhunting whatever company we think is going to be a good one, and we go ahead and say, hey, let's purchase you, let's buy you, since we're already public. If we buy you, now you're public too. So it's sort of helping someone do that. So what's interesting with all this, so SPACs actually started in the 1990s, but they've actually gained popularity in the past couple of years. Who has a SPAC right now? You see a lot of big celebrities. So right now, Jay-Z, Serena Williams, Shaquille O'Neal, Steph Curry, Alex Rodriguez, Colin Kaepernick, they all have SPACs. And why? Yes, they're celebrities, but they're doing it so to get rich and to advertise and promote the investment, whatever that company is. Because if others buy in, they make more money off of that. It's sort of like, why do you take a celebrity and stick them on like a razor commercial? Because you want to increase the sales of that, that. So it's the same thing here. Jay-Z with his what did he just sell? His Ace of Spades. I forget that brand. It's LV something, whatever his champagne or that is, right? Like if he's the face of that and this company takes him public, it's going to generate sales for that shell company and him as well, because now people can invest in that. So that's sort of the ride of a SPAC. What that is, it's somebody else taking them public. They're holding their hand. They're saying, hey, let's go ahead and do this because we think you can make money. Slap a celebrity on there. Now it's more marketing. Now more people are going to invest in that company. So that's what that is.
And to the point of the headline, the SPACs did a record 109 billion in transactions globally in February. I mean, that's like no small number. So it's definitely something that is becoming increasingly common that we've been seeing.
Yep.
Let's jump into number 9 here. So I have Exxon Mobil, the oil company, joins the fight on capturing carbon emissions. Yes, you heard that right, Rich. Exxon Mobil, who has been like a global warming is nothing, like we don't need to worry about this. They've been resisting like this kind of like behavior and headlines. They are now joining the fight to capture carbon emissions. The industry said, Exxon Mobil said that it plans to increase investments in carbon capture technology, which it pegs to be a $2 trillion market by 2040. So they looked at this and they said, okay, we're going to see a lot of market. We're going to see a big cap in the market here for this technology, and we want a part of that. So they're jumping in now. When they announced that, their stock is up almost 8% last week. And then also a side note, Exxon Mobil also just announced that their refinery in Baytown, Texas is back up and running. This refinery specifically was closed because of the cold weather that hit Texas, but just kind of another bump there that might have been part of why their stock was up this week. But yeah, well, how you feeling about Exxon Mobil? How you feeling about carbon capture technology, Rich?
Well, how I'm feeling about that, I guess it doesn't matter, because what does matter is Exxon Mobil has to do that. Look, we just talked about all these companies going electric.
Yeah.
What is Exxon Mobil if that happens? If they don't somehow wedge their way into capturing carbon emissions or whatever they can do with their natural gas and with being a predominant in the oil industry, like that's not going to be a thing down the road. They need to figure out something to do. And so I think that's why they're getting into as much of this as they possibly can, because they don't want to be left behind and they have to be doing something different. So it's one of those things where they have to do something. And
that's a good point. Yeah.
Headline number 10, Target's fourth quarter sales jumped 21%. And I actually don't like Target. It's too expensive for me.
You don't like Target?
Target is too expensive for me. But for most everybody else I talk to, they absolutely love Target. And good for them. Sales are jumping 21%. Revenue grew more last year than in the previous 11 years combined.
That's crazy.
That is intense. Yeah. Also, in the fourth quarter, same-day delivery jumped 212% from the year before, and curbside pickup jumped 500%. So why? Question is why? Why is all this happening?
Right?
Convenience. But my question I pose is, has Target replaced the mall? And here are some indicators that it has. Stores within stores. Think about that. Like right when you go to a mall, you go to one big store and there's a bunch of other stores inside here. Target is now partnering with Casper Mattresses, Disney, Ulta Beauty, and now even Apple is going to be inside of these Targets. Also, Target has 46 different brands to give shopper a wide variety. So it's not just like, you go to Aldi, you got two things to choose from. They have 46 of their brands. Their athleisure brand hit 1 billion in sales. Think about the Lululemons and things like that.
Right.
More people are going and buying their brands. I mean, 1 billion in sales is crazy.
Activewear.
And you can get groceries inside Target as well. So it's a one-stop shop. It's got all your mini department stores in there. So it could be a good stock to invest in for the future when you're looking down. I just think it's doing really good things for Target. They were able to capitalize in the market that we're in. They were able to do some great partnerships, and they were able to adapt. So good for Target. I still won't go there.
Yeah, I love that word you just used, is adapt. We've heard about Target being in the headlines over the whole course of COVID, and that's what they've done. They've adapted. Their curbside pickup up 500%. Their same-day delivery up 212%. Those are huge increases. I mean, obviously, a lot of it has to do with COVID, but they've adapted. The Ulta Beauty we covered in a previous morning coffee break. They have, their own beauty supply partnership now. Apple, really, I haven't seen this yet, but I'm assuming we'd walk into a Target and you see like a little Apple store. They're adapting very seamlessly in a very good way. They're always seeming to keep up with the times.
Yeah.
And if you're a company and you can do that, you're not going to die. Like, I haven't heard much about like Kohl's, which I think like used to be like a big competitor of Target and stuff like that. Maybe not as big, but Target seems to be doing really good, and they're on the right track.
Yeah, no, 100%. Like I said, it's a little out of my price range. That shows my frugality. But it's great for my investments. So keep it coming. We are going to move into our notable mentions who didn't quite just make the mark. And I'm going to go ahead and talk about number 11, Oatly. The oat-based milk brand has entered a nationwide partnership with Starbucks. And we talked about actually oat milk being number 2 next to almond milk, but now it is partnering with Starbucks.
Don't quote me. I could be wrong, but I'm pretty sure Oatly just went public, didn't they? Not too long ago?
I think they did.
Yeah, so that's a great partnership there.
Yeah.
Jumping into number 12 here, we have Best Buy laid off 5,000 employees and plans to close more stores. So I think this is probably the aftermath of COVID sales and projection reports by them, operating costs, all that good stuff, but they had to lay off 5,000 employees. Never a good thing, but worth mentioning.
They were doing really good in the beginning of COVID, actually, when people were buying TVs and things like that, because they were all, but now it's like, okay, they got all the stuff they need. There's no reason for them to go back to Best Buy.
Yep.
Number 13, ice cream sales jumped 20% in 2020, and sugary snack foods increased 8%.
People staying at home, eating all that good stuff to stay happy. That's great. Number 14, here's another EV company, right?
Yeah.
Volvo plans to go all electric by 2030. It's like, if you're a car company, you gotta make the pledge now. Otherwise, you're the odd.
That's 5 years after I think what GM decided to go. So
they're all doing it. They're all doing
15, Spotify's U.S. podcast listenership is projected to overtake Apple Podcast for the first time. I thought that was interesting. But we're on both of those, so we're good.
I've always been a Spotify guy, so that's no surprise to me. But Apple Podcast is huge. I mean, they have a huge following and a huge user group, so that's Spotify is really stepping up to the plate to mess with them,
Mm-hmm.
All right, number 6, the SpaceX Starship prototype struck the landing in its 3rd flight test, but then it blew up sitting on the landing pad just a few minutes later. So, they're testing the new Starship. It exploded. Probably was not intentional. So you can check the link below if you want to read more about that.
Number 17, Amazon is in talks with the NFL to air a significant number of Thursday night games exclusively on Prime Video, per the Wall Street Journal. That's interesting. So now I have to get Amazon Prime to watch that? I don't know. I
think it's just a partnership, a way for them to watch I think it's great. I'm a Prime person, so like if I get my football now on Amazon Prime, I like that.
I can't watch the game if I don't have Prime. What the heck?
Number 18, Lyft said that the last week of February was its best week in ride sharing since the pandemic restrictions began last March. So they're finally starting to see some of those ride sharing come back. People are using the ride sharing apps more. It's kind of good. And guess what? Their stock shot up 13% last week. So looking okay for them. Yeah,
I'll be interested to see how Uber and Lyft and some of the other ride-sharing companies, what they do differently going forward.
Yeah.
19. The Senate passes a $1.9 trillion COVID relief bill. House Democrats plan final approval Tuesday. So we'll see what happens then.
Yep. President Biden said it won't be easy, but he said people are essentially desperately needing money, so he's really looking to push out another round of direct payments to Americans and stuff. So we'll have to see what happens with that. And last but not least, number 20, China-linked hack hits tens of thousands of U.S. Microsoft customers. This was a hack that they think originated from China. And there was apparently a lot of data, and it had to deal with like their emails technology or servers or something like that. A lot of data was compromised and breached. So that's been all over the headlines. Good luck to Microsoft. That's all I can say.
And that wraps up this week's episode, and we hope you enjoyed your morning coffee. Tune in next week to see what news is brewing. In the meantime, don't forget to follow us on our Facebook page to stay up to date with some current market trends. And hit that thumbs up and subscribe button. It really helps support the channel. That does it. See ya.
See ya.